Hello, everyone, and welcome to the Core 4 Show. I'm Coach Brandon Adams, and we are here for another wonderful week of talking about how we can change our financial futures. And let me take this off right here. That's what belongs there. We also do basketball too. But anyway, so the idea behind the Core 4 Show is that we want to get from where we are to where we want to be. And so we do that in several ways. The first way we think about is mindset. What is our mindset here when it comes down to how we actually address making money, how we address failures? I tell people all the time, like when you think about making money, if you have a bad experience with something, does that mean you're never going to do it again? We talk about relationships. If I'm a heterosexual and I have a bad relationship with a particular female, am I going to then choose something different? No, if that's who you are, that's who you are. So the idea behind mindset is how do we get to a point where we can keep trudging along and not take it personal, and we learn from our mistakes. So we focus a lot on mindset here at Core 4. The next thing that we focus on is, of course, is getting rid of our 9 to 5. Nobody likes a 9 to 5. And so when your time is not your own and your freedom is not your own, then you're going to have challenges always in life. Always, always, always. And so our goal is to change all of that by giving you opportunities to have things in your life that are like employees. So we have a couple of things. Number one, we have the Core 4 bot. Number two, we have Go Baby Trade. Number three, let's see, we have yield farming, which we really are excited about. Number four, we have Miracle Cash and more. We have Get Fit Mining. I'm looking over here. We have Nextcloud. We also have private membership groups. And so options as well. As a matter of fact, we'll be talking a lot about options today. So I'm excited about that. And so the idea that we're getting rid of that 9 to 5, it's an amazing experience. The next thing, that we have, besides getting rid of that 9 to 5, is also investments. You have active and passive opportunities. And so we're going to discuss that today. And then also, finally, we have retirement. Like when it's all said and done, and you just don't feel like doing anything, how are you going to pay your bills and actually plan for your senior living? Because inflation is outpacing so many things that we could do to actually have an income. And so, how are we going to survive? And so, helping ourselves to build this education is what Core 4 is all about in the team that we have. So, we're going to welcome Chris Pulver and James Bishop, who are our standing superstars, because I believe that you must be a subject matter expert first. You must then become the best version of yourself, and you must surround yourself with people who inspire you. And so, these two gentlemen here do just that. What's up, buddies?
What's going on? How's it going?
Good, man. You've been all over the place.
Everywhere and leaving Tuesday to go more places. So,
That's because you've got the right mindset, and making that money is all about that. So good to
abs-
see you,
absolutely. Thank you.
Chris. How are you today?
I'm good.
Man,
James, nice to see you, man. It's been a couple weeks since James joined us, so nice to have him back in this little window.
yeah, this little window, right?
Right. Yeah. It has been it's been a little too long. I know. I apologize. I've been everywhere, traveling, as well as just another speaking engagement that took some time away. And it's just hard to be in multiple places at once some days. And then school has been kicking my rear end, but hey, we still gotta get through it, right? It's
Yep,
good pain.
Well, we
So
feel complete now. We feel complete.
that's right.
So, so
well,
Chris,
I'm glad we all got the gray shirt memo. Like that's just hilarious. All three of us. I noticed that. I was like, wait a minute.
Core 4 memo, man.
Right.
that's right. That's neutral. That's neutral. Just like we are in the selection, right? Uh,
That's it.
yeah. Okay. Sure. Um, Chris, how's your elbow?
Well, I mean, it's awful, but it's as good as it can be for right now. And I'm lifting and trying to do better rehab, ice it, on a regular basis. Trying to see what a heavy amount of like collagen might help me with collagen and proteins. I don't know. I did the platelet-rich injection that kind of helped until it didn't. And I mean, basically, the doctor said like, well, stem cells don't grow back bone and cartilage. So that's pretty much what I need right now.
So,
So it's gonna take time, but I mean, the flexibility is a little bit better than it was before. Instead of being 100%, it's probably 90, 92. But
gotta go to Panama to get the stem cells.
maybe. Yeah.
My wife loves hearing that.
Uh-huh.
We gotta have a road trip back home.
There you go.
I actually hyperextended my elbow playing against an former NFL player. He's like 6', 290, and I'm thinking I can steal the ball, and I reach and I go all the way out because I want to win the game. And
Man, try to be Nick Anderson on Jordan, huh? Stealing that ball to win the game.
I'm a professional, sir.
There it is.
Yeah. All right. Well, we got a couple of things that I want us to talk about. I don't want us to spend so much time on like what we normally talk about. I want to like get laser with that because Chris, like we talked about, I want to give you time to really talk about, what you've rolled out and, give you about 10 to 15 minutes to really just share. So, let's jump right into it. Let's dive in, what's going on in the market and, the economy. So I'll bring this to, do you have anything you're sharing today?
I mean, I could just talk the market. I mean, I can mention, I'll mention a couple of services that I'm running, but yeah, it's all good. I mean, it'll be in passing.
James and James.
Oh, right.
Yeah, and did you change your name? It's now Jane.
Oh wow! Look at that. Yeah. Can't even spell my own name.
It has been a while.
I think it's Jaime today.
Right?
Jaime.
That's hilarious. It's
all good. What does that stand for? JAME. All right.
Well, James is plural, right? So I'm just one person.
Yeah,
so
the one and only James.
Exactly. There we go. Oh man.
So, let's start knocking out, guys. You guys have the floor.
All right, sounds good. So, look, this is a pretty massive week. We have over 800 companies reporting earnings this week, including a lot of the Mag 7. Tesla had a big pop last week that brought it from like the 215 level up to 260. Nvidia recently popped all-time highs. The Nasdaq's come back in a decent way. We're not quite to the July highs yet, but Nasdaq was one of the better performing indexes last week. The S&P finally broke a decent streak. Let me go to the weekly chart. We can see this a little bit better. We finished a little bit softer in the S&P. We finished a little bit softer. I mean, really, the weekly candle on the Dow doesn't look too hot right now. But I'll go to the daily chart and kind of show the context of everything. Go to the Russell, same type of thing. Pretty massive sell-off in red on the Russell. But part of me is almost happier that the market was willing to sell off a little bit just to offer some type of dip prior to the election. The one thing that would be the most kind of technically odd to me would be going into the election sitting at all-time highs. We're already near all-time highs, but I'm talking like literally breaking and bursting into all-time highs as we go into an election. James, I'm not sure, if you're following the election closely. I'm sure that you are. From what I'm seeing from all of the like third-party, they're like sports betting sites. There's one that's allowable in the U.S. and a bunch of them that are in the U.S. There's some big bets going around the world that have Trump leading by a pretty big margin. I mean, I've seen as much as 63%. I've seen probabilities as much as like a 41% sweep to the Republican side. So, I mean, if it's popular vote, electoral college, and it's a landslide type win, like who knows? I mean, I don't know if big bets are going to skew the lines. Usually that's not possible, but you never know. So I'm curious how it all shakes out. But again, with the politics side of things, all I'm saying for the election is if the markets are going to experience some type of policy change, then I think the markets actually care. But I think right now it's almost a foregone conclusion that either side that wins is going to be spending money on the government side. Because one thing that we are doing right now is to the tune of $1 trillion every like 30 to 45 days. We're adding debt to our economy, and it's not changing. And I know that at the same time, as much as everyone wants to have like the doomsday and the bear porn and say like, oh, this debt's out of control, buy Bitcoin, it's like, well, everything fails. If we have a global financial reset, everything fails and has to be built back from the ashes. So I don't think that's necessarily the play. But I do think that whatever is happening is going to be, as long as there's no major policy shift to get the market nervous, I think it's, the best way to combat inflation is to be invested. And right now, the equities runway looks pretty good and pretty promising. I think a pullback prior to the election is a good thing to let the market justify why we would, be buying at these pretty rich valuations and buying near these all-time highs. So a dip to me is healthy. Once the election is done, you have a big week, right? This week, 800 plus companies plus Mag 7. So you got your Apples, your Amazons, your Microsoft. You've got some other notables in there. Eli Lilly's a big one that came up this year with Ozempic. You've got some big energy on Friday. Once we get through this week, then it's all about the election, which is a bit of a waterfall of things too. You got the election, you got the Fed, which is likely to cut rates another 25 basis points. And then you have a non-farm payroll announcement on Friday. I believe it'd be the 8th of November. So unless it's the 1st.
7th of November.
Yep. Wait, no. The 7th is a Fed. That's a Thursday.
Oh, sorry. You said non-farm payroll?
Yeah, non-farm should be the 8th.
Okay. Yep. Sorry. My apologies.
Okay.
Yep.
So,
non-farm is on the 1st of November.
Okay, so I was just gonna ask if that was actually the 1st. Okay,
Yep.
So we have Mag 7 and 800 companies this week, and non-farm on Friday. That goes into the election, the Fed.
And we have PCE as well as Bank of Japan this week, and we have GDP coming out this week as well.
Yeah. So bottom line is there's a lot for the market to take in and digest. I do wonder if it's going to be a very volatile week. We might not have a lot of direction, but I could see us being very volatile. So, my strategies would kind of play that accordingly, at least in the near term. I've had actually the last, month or so. I mean, Brandon, I think I haven't been on with you for the last couple of weeks here, but I've hit several all-time highs in the portfolio for the year. And so the trading's going really well. I'm positioned for whatever the market's going to throw at us. I really have a strategy right now that I'm working with that basically has a built-in black swan event just in case something stupid happens by the end of the year that allows me to offset, a variety of losses and drawdowns to kind of mitigate some of the damage that could happen if the market were to dip like 5% or 10%. But at the same time, I do think that a little pullback is healthy, and then a run into the typical, Q4 seasonality, November, December, looks pretty promising right now as we get into, good luck with the new administration. Good luck in 2025. But this could continue for a while. I mean, this can of debt can continue to get kicked down the road for as long as it can until it can't. And nobody knows when that's going to be. So I'm certainly not going to be the type of investor that's trying to go, put it on blast that, this market's going to fall, it's going to fail. I mean, look, if the market pulls back 10, 15, 20, 30%, cool. I have right now, I have $750,000 to be buying. So what I'm doing is I'm playing the game right now as is, which is just continuing to kind of generate income, continuing to hold positions, continue to have like defensive plays, but also if the market's going to melt up higher, I will benefit from that just like the entire market will. So I don't care if it's Trump, I don't care if it's Harris, it doesn't matter to me. I just don't want to see taxes change for, entrepreneurs. I don't want to see taxes change for, low, middle, and upper class. It's like I want less disruption. I think the bigger thing is the bond market's calling pretty much the bluff of the Fed and saying they can't be as dovish as they're planning to be. And that's perfectly seen with the yields that have been ripping over the last month since they cut rates back in September, and yields are way higher and bonds are way lower. So the bond market's essentially calling the bluff on the Fed saying there's no way you guys are going to cut rates this much because we have inflation coming again. So that's where I'm at right now. A lot of defense, a lot of melt up scenarios. I think we still have bullish trajectory towards the end of the year, but a pullback with this week, Mag 7, James, I'm curious your thoughts too. If Mag 7 doesn't blow out earnings for this quarter, for this week, since we have a lot of the earnings on Mag 7, I almost wonder if the market's going to also take that where, what got us into these all-time highs this year was AI and Mag 7 and good, strong, large cap. But if we see this rotation away from it, the large cap, I mean, there's probably $20 trillion up for grabs this week with all these stocks. And if the large cap doesn't perform to a big clip, the market could certainly sell off a little bit and be disappointed in a way for Mag 7. That will drag the market down lower. So
absolutely.
So we'll see. I mean, but like I said, it's probably going to be path of least resistance, good seasonality. Election years, the market tends to behave where the first half of the year performs at X%. The second half of the year carries on the momentum. The S&P is up over 20% this year. The NASDAQ's right there. The Dow has given back a little bit, but still green in the year. Same thing with the Russell. There's a lot of rotation happening, but all that matters is if you give the market the next 3 to 5 years, you probably have a pretty good probability where it's going to be. You give the market the next 3 to 6 months, nobody knows where it's going to be. I don't know where it's going to be. James doesn't know where it's going to be. It's like, that's why it's so simple to just, if you're a long-term trader, have dry powder, have margin, have cash at the ready to be willing to buy things on discounts. And when people are panicking and pushing the sell button and get out of positions, that's when we should be actually looking to kind of dollar cost average in just the simplest of terms, but participating when the market's falling. So I'd love a pullback. I just know that, if we don't get anything more than a 3% pullback or 2% pullback, then fine. Let the melt up continue. I'll be fine. But I will be very protective if we get to these all-time highs. The price to earnings ratio right now is higher than it was back in 2020, and it's now creeping up on the highs we saw all-time back in 1999 and 2000. Again, that doesn't mean there has to be a top, because obviously companies are different now than they were 24 years ago. But if you look at an all-time high that the S&P's never been valued this high before, I think that's room to think like, okay, we could probably have some pullbacks coming, because there's reversions, right? Stocks can't go up forever, but they can certainly have these cleanses and reversions, and they can, they can pull back. And another thing that I think is interesting is how many people out there, you guys included, how many of you guys think that being a stock picker is better than just being an index buyer? Because most people would tell you like, oh, if I just picked NVIDIA and put it on my portfolio in NVIDIA, I'd be a bajillionaire right now. I mean, people are leaving the company at NVIDIA because they made so much money stock options. But over the history, I mean, like Cisco was one of the greatest IPOs that ever came out during the tech boom, and Cisco is still down 70% from its all-time highs. So being a stock picker over time tends to fail when buying the index, or buying the haystack, if you will. Instead of buying the needle, buy the haystack. And that's really what I'm positioning for the portfolio. Is we'll be fine. We'll be fine in the portfolio. The NASDAQ will find a way to go higher. The Dow will find a way to go higher. The S&P will find a way to go higher. If it's 3 to 5 years from now, it's easy. If it's 3 to 6 months from now, I play defense. I buy hedges. I protect the downside. If we melt up, cool. I'll waste the quarter to 0.5% in hedges that pay me 10 to 20 to 1. If they don't work out, they don't work out. But meanwhile, there's good upside, and I'll maybe generate an extra, 3 to 5% by the end of the year, maybe more. But I'm happy, and I've got happy clients, and I'm in a good position going into next year.
Yeah, I want to second that. There's a reason why that the masses are typically invested in mutual funds. The problem I have with mutual funds these days, and some ETFs, like if you're in a million of them, is 80% of them all have the same 7 stocks, and they have the same 7 exposure. And so you think that you're diversified, but generally in the portfolios that I've been reviewing for people, and I show them, I open up these mutual funds, I show them the list, and they are invested 50 times in the same stocks, and no wonder their portfolio loses so much when when that bear jumps out the window and the market decides to pull back a little bit. To your point about government spending, I think that is going to be the saving grace of GDP. I actually was just watching 60 Minutes earlier today, and one of the things that the person from the individual who is going to join President Trump, if he is reelected, he'll serve on his board again he's been an ICE agent forever. They basically ran the numbers, and it'll take 80 billion to deport 1 million people. Think about that. Like $80 billion to deport 1 million people. And they're going to do it in phases. And then something else that the reporter had brought up is that if they deported let's say they started or just did it, right? Deported all of the illegal farm workers, hotel workers, service workers that, our GDP would drop $1.7 trillion overnight. And what do you replace that with? Elon's robots or NVIDIA's robots? Like eventually, sure. But, so there's got to be some more planning that goes into all of it. It's not as simple as somebody gets elected and everything changes. Right. We know that's not the case because economies don't change overnight, right? It's one of those things. Now, something else you brought up was Eli Lilly. I don't know if this has been kind of big, but Novo Nordisk, and ticker symbol is NVO. They actually are at a really low point right now, filling that gap that they had back there. But they have an oral version of basically the semaglutide pill. And semaglutide is the active ingredient in what's that stuff? Ozempic, right? Ozempic, so it's the active ingredient in it, and it helps block the GLP-1 enzyme, or I guess neuron that is released in your brain to tell you that you're hungry. Well, though it has shown 14% reduction in heart attacks and strokes in diabetic patients. It's also shown to be just as effective at lower doses, so you don't have to have these crazy amount of doses that Eli Lilly is. And they're making their pill for companies like Hims and Hers and Roe and all these other companies, and they're using that. So I can see a opportunity in NVO just from the fundamental basis of, hey, they're going to get more business and that's going to drive their revenues higher. Yep. Now, will it be an explosive thing like Eli Lilly? Probably not, right? They're not going to $900, but could I see them, at that gap there, Chris? If you zoom in, I think it's right at $100, if I remember correctly, when I was doing it. Yeah, right in there. At that gap, I have a couple of buys that I'm looking to place. Probably right after this call, and a couple of buys right in that zone as well, because that's where there's opportunity, and this could them. And there's another company that's about to come out with one as well. I think it's Merck. If I'm not mistaken, it's probably Merck. But that's another. This is the hot topic: is helping people lose weight, and sure, it's by a drug, and sure, there's side effects, and sure, there's this, and sure, there's that. Sure. But for the masses, there isn't as much as we're seeing on Instagram and other news sources. It's not as bad as everybody's actually purporting it to be. Yeah. So, it's it'll be interesting. I think Merck and NVO are two opportunities I really like that are non-election related. You also have, things election related. We have, things going on with the Houthis again in the Middle East. We got things going on with Russia again. We have China saying they're going to repatriate Taiwan. Who knows what happens with that? We have manufacturing moving back to the U.S., a lot of it. So it'll be a very interesting 2025, to say the least. I think this year, I think Chris is spot on with what he's saying. If we were at the all-time highs going to an election, I'd be worried because that means somebody's going to be upset somewhere. Yep. And then when it comes to the Vegas odds in the election, I always know Vegas always wins. It's just one of those things that who knows, right? It's like there's a big unknown there. And I will say, I'm going to go out on a limb. We're not going to have the actual results of the election on November 7th. Probably not on November 8th. Probably not on November 9th. I think it'll be one of those, somebody's going to sue somebody and some state's going to be held up. And
it'll just be questioned. They'll just question the results. It'll be like 2020 all over again, which I don't think is going to be great. And honestly, the markets might take a lot of heat for that. Like the markets might not love that uncertainty. And again, this is what nobody likes to see. So I'm just saying for the next couple of weeks, I'm tightening down the risk profile here. I've got some hedges on just in case something stupid happens, but it's I don't need to take a bunch of fresh positions right now. This week with earnings, I'll take a look at the technicals. I mean, look, it makes sense to me that if I go to, this list of stocks here, these are all notables. Look, I could take a position on pretty much all of these and say all right, I'll make a very cost-effective bet and trade it short term. Now, if that pays out, cool. If it doesn't, no big deal. Small risk, small reward. But there's nothing about this that I want to say I'm going to build a position because of this and this and this with the election coming up and all the stuff that is going to be potentially very disruptive. It could be, actually more like interruptive, right? Disruptive would be we start changing the course and going the opposite way, but I could see it being very volatile and very interruptive where it's nobody has any clarity on direction after this week or next week, because even this week with earnings, I don't think the market is going to love sitting at all-time highs just because we have some, hey, example would be Netflix. Netflix, I made 2 solid wins in Netflix during earnings season. That was 2 weeks ago. And now we have Meta and we have MicroStrategy, which has been ripping to all-time highs without Bitcoin going to all-time highs, by the way. And then you have Apple and Amazon. You got Microsoft in there. It's you got a lot of market cap this week that's swinging around. And I don't know if we're going to have any direction. But that doesn't make me want to say, well, I'll just take strategies to sell that premium. Because what if we have bigger than expected moves, then it gets faded right away. So I just think it's silly to take a bunch of unnecessary risk when I'd rather see how the market kind of digests it, settles, and then see if we have some traction as opposed to this very short term, you win, you lose, and then you kind of reposition. So for me, I want to be hedged. I want to let the positions come in as they do. Hopefully we see some pullbacks. I mean, really simple stuff that I'm watching. would be James. By the way, I just pulled up the fundamentals on MRK.
Yep.
This one to me looks a little bit better than the NVO. There's the MVD.
NVO, yeah.
NVO, yeah. So fundamentally, it looks a little bit better than NVO. I would be happy to take some Merck positions versus just buying Eli Lilly, which if you take a look at the stock, I mean, this one is down from the previous highs. I mean, all-time highs were down about 23%. Nice little discount, fundamentally checks a lot of boxes there. Eli Lilly, I think, did things that nobody expected it to do. And it's, this was a crazy pullback during that August 5th bottom, and it's down 22%, but we've since, came right back to the highs again, pulled back into some good structure. I do wonder with this type of valuation, if this is a stock now that's ran so hot for so long that this becomes the new move, and then we see if we can base here, and then we're justifying higher highs. But it's going to have to build that position up. We look at something. Let's take a look at Netflix.
Take a look at NVO again, because the first one that comes up on that site is NVOS, which is not NVO on Simply Wall Street.
Oh, I gotcha. And I'm pretty sure I pulled it up. Yeah, NVO.
It's the one below. Yeah, the second.
Oh, you're right. Okay, never mind. My bad. I did pull up NVOS. Okay, you're right. Yeah, good. Yeah, both look good.
Yep.
Cool.
It's very undervalued as well. It's like 30% undervalued right now. So NVO.
I will say this too. One sector that I am liking for the next 3, 5, 10 years would be something in the healthcare space. I mean,
absolutely.
Look, the amount of garbage that Americans put in their body with food, and you're going to talk about like, oh, we can't put drugs in our system to help us lose weight. Are you kidding me? That's what everybody would want to do. That's the instant way of doing it. It's like, how American is that? Just putting, injecting your belly or taking a pill or doing something where it's like, yeah, I lost 40 pounds because I don't feel like eating anymore.
Right.
I mean,
well, the other thing,
we're gonna do it.
The other thing is, like, I hate to say this, and like it gets into a little bit of morbidity, but people born in 1946 to 1964, they're getting into their 70s and 80s now. The GDP is 2/3 of our GDP was already healthcare, and it's going to go even higher
for sure
during this next, probably 10 years. So pharmaceutical companies, medical companies, medical device companies, those and hospitals, those are going to be big winners, as well as I mean, even the government through Medicare and Medicaid, they're going to be spending more on that. So it's going to be a interesting thing, but I don't want to stay on healthcare too long because I got a soapbox I got a Costco size soapbox to stand on about that. But I think it's really true is that that's it's not 60% of our population anymore, but it's still, I think 30% of the population is in that baby boomer generation. And so that money spent on healthcare is going to be big. So I think companies like Novo Nordisk, Eli Lilly with their cancer drug that's going through phase 3 clinical trials right now. As I think that even has opportunity if that goes through. And then you look at Merck as well. I mean, those are just solid companies, dividend paying companies that'll pay you out no matter who gets elected, what's going on in the world. People still going to need medication,
Yep. I wonder, James, I do wonder too. I have some exposure in Pfizer. I am sitting up around 20 grand in Pfizer right now with literally the last couple of months. I've just been doing nothing but selling like a one strike out of the money call, one strike out of the money call, one strike out of the money call. This stock, for the life of it, doesn't want to get me above that strike, but it's okay because every 1 to 2 weeks I'm pulling in like $300 to $500 of income, and I'm just going to keep doing it until this is effectively a free trade. But they do have earnings this week, and I'm curious. I mean, how is Pfizer not in that landscape or in that arena versus just like it was all COVID for a while, which is why they probably took the bigger fall that they did. But I know that when they started to bottom out, a lot of that was starting to pivot more towards cancer, more towards weight loss, more towards, what's now trending, as opposed to like, look, nobody cares about COVID anymore. I know it's still out there, but nobody cares. If we ever have a pandemic again, you know how skeptical the world's going to be from what everyone experienced back in 2020. So I mean, Pfizer needs to get on the train with what's trending, and I think it's going to have to be in the weight loss space. There's going to have to be cancer. I mean, could you imagine like any of these companies? All of a sudden, it's just like we cured breast cancer or cured any type of cancer. It's like, I don't know. And you could argue that the food and the medicine and the treatment actually does exist somewhere, but it's called sick care more than it is health care. But that's more of the conspiracy side of things. So
Yep.
anyway, but I think
Being
Pfizer
real
would
quick
be
with
nice to go
Pfizer,
up.
with Pfizer and any drug company that anybody ever, this would be a good point to any drug company that you're looking to evaluate.
Mhm.
Don't just look at their current financials and their current filings and things like that. You can dig through their 10K, and public information is what pharmaceutical drugs are in process right now to see and where they are in their clinical trials.
Right.
If something's in phase 1, that's like a 25% chance that it goes to, that it gets released. If something's in phase 3, that, just so everybody knows, that's human clinical trials.
Right.
And so if it's in phase 3, then there's a pretty good chance that that drug gets released. And when you look at Pfizer and drug companies, I found that like many different companies, they've kind of divided themselves. You have your weight loss drugs, you have your cancer drugs, and you have cancer drug companies and weight loss drug companies, and then you have medical device companies, and they're slowly kind of siloing themselves into what they do instead of trying to be everything to everywhere. Right. So Pfizer really made a big bet in mRNA coding, and a lot of people don't understand that. I just uniquely have a lot of medical history and understanding of it. It all came from the Human Genome Project back in like 2001 when we mapped the human genome for the first time. That technology, it used to take months to do that, and now it takes minutes to hours. So we can pull somebody's blood, go through their entire DNA, and find out, hey, they have a gene or a genetic marker that protects them against asthma or protects them against MMR. So they don't need an MMR vaccine. They don't need that, but they may need this vaccine. And that's where Pfizer kind of put itself. And then what they can do with that is they can take a random a disease that comes in, they can see how it affects all phenotypes of blood and then create a vaccine that will generally protect most people. And then the last thing is, people got to remember, a vaccine is to reduce symptoms. It does not mean you don't get the thing. There's a lot of confusion around that, and still is to this day. So, I'll say that, Pfizer's one of those that they're more into the development of certain vaccines as well as their everyday stuff. I mean, they release so many, just like, Advil and all of those drugs that they release as well. But, they're just go through and look for their 10K. It's public information. You can get it off of their website. Read through it. It's not the best read. Do not read and operate heavy machinery because you will fall asleep, but just try to find what they're producing, what their dividends look like, and things like that. And that'll really kind of tell you, hey, this is a company I want to be a part of, or nah, this isn't one I want to be a part of.
Right. Yep. Well, I mean, even if I don't want to be a part of it, I'm still making some money on it.
Hey, that's the beautiful thing. That's it.
All right, guys, let's jump into Chris. It's take over for your new project.
Sure. So I have a couple of services that I've been doing actively the last few months, and they're going really well. I got a lot of happy traders. And, one is something I trade each and every day with my members. I do a live trading room at 9 a.m. The other one is something I do every Monday at 11:30 a.m. So I'm trying to make it very systematic, very mechanical. I'll start with the one. So Brandon, you and I spent some time in this last week. It's really simple. And so, also I can help kind of Brandon be a cheerleader for the strategy itself. Because basically one thing that's been like the constant phenomenon of being in the markets would be participation, long horizon, and dollar cost averaging. So you combine these things that over 90 years have essentially been the reason that the market continues to do its thing. Like I said earlier, if you're a stock picker, usually over a 10-year window, those stocks fail. And right now it's like, we've called it the Mag 7, but I don't know how much longer Mag 7 will continue to lead everything in the stock market. Like Nvidia was very disruptive to be the stock that it is. Is Nvidia always going to be the game changer? I mean, James been on these sessions with us saying that, look, Nvidia has a great head start, but when you've got Tesla trying to make their own chips and Apple making their own chips, and they're going to be competitive and increasing, all of the CapEx spending has been fueling Nvidia because it's like the best head start in town. But eventually, when you've got like Intel's and legacy tech that's building its own stuff and building it as an alternative, that added competition is going to take away some of that market share and that moat that Nvidia has. So my point is, if you look out 10, 15, 20 years, you can't say that, Amazon forever is going to be the stock that I always go with, or that Apple forever is going to be the stock that I go with. But I would be way more certain to see that the S&P 500 finds a way to go higher, or the NASDAQ 100 finds a way to go higher. And I hope that we have pullbacks and drawdowns. We have some healthy market cycles. You could argue too that it's like, well, what about energy? What about alternatives? What about Bitcoin? What about gold? This is a weird year. The fact that gold is actually outperforming the indexes this year is telling us something. The fact that bonds have done the complete opposite as everyone thinks when the Fed is cutting. But long story short, back to my strategy, I teach these classes to people that are these are two income-based strategies where I don't have to spend a lot of time from the computer. I can do these trades within, typically 30 minutes a day. The one that I place on Mondays literally takes me less than a minute to place the trade, and it takes about 11 to 15 days to take profit. I do it consistently. I don't argue about the fact that it's a Wednesday, it's a Friday. Nope, I do it Monday at the same time every day. So I do that over the course of, I could basically say for the history of the stock market, I could do the strategy and turn out to do pretty well. Even over the last, I've got a software that I can test 11 years of tick data, and basically for point for point and minute by minute, I have 11 years of data that shows, okay, we had a 20% pullback and sideways market in 2015, 2016. We had a breakout in 2017 where every month was positive. We had a vol event January in 2018 and a 20% crash. Came up and hit all-time highs in 2019. Had a COVID crash in 2020. Came up again in 2021, 2022. Peaked and fell 25 to 35% 2022. Came back in 2023 into 2024. We had a 5% to 8% pullback in April. We had a 10 to 50% pullback in August. And guess what? The strategy looks like it never took a loss. It's just a silky, smooth, dollar cost average type strategy where I use options for leverage, and it does really, really well. And it's always risk defined. So the nice thing is you can pick and choose your sizes. I also have a way that if I do take losses on the strategy, I'm confident enough in my ability to trade options that I can repair those losses. So if I take 1 to 2 losses, I can take one style of trade to like own the stock or own the underlying and then repair it to make up for those losses and get back on track. So like I said, I like the way that the strategy is run and taught, just because I do it the same time every single day. The Mondays at 11:30, really easy strategy for me to teach. Have a bunch of people in the room. We can all take the trade. We're taking super liquid instruments. And so I've got those services available. Yeah.
How much are they? How much are the services?
So I know I've got one service available for $897. The other one is currently for a year service $1465. I do have some discounts available. And on top of that, one thing I just finished this weekend, I got to polish up a couple videos with just some edits and things. But this is one thing I've been getting a lot of requests on, is people see me live almost every single day on YouTube. I'm live for these trading rooms. I'm live for these sessions. I collaborate with a couple of the services out there. I run my own session every day at 3 p.m. Eastern time for a final hour market recap. And so I get a lot of questions where people see that I talk stocks, I talk ETFs, I talk futures, I talk options, I talk Forex, I talk crypto. And so I do mention and show my entire portfolio. And so a lot of it is, it's this stock position, it's this ETF, it's this options, this is what I'm doing. I build strategies. I'll trade live on the spot when I get a nice setup. And so I built an options course called Practical Options. And I just built that for a basic version to get anybody's feet in the water for learning how to trade options, where I can take away the intimidation factor of how, the language, the jargon, the silly strategy names, the Greeks and all the stuff that everyone's just like overwhelmed by. I just take that all away, and I just try to make it very simple and practical, where you can actually look at a chart, understand, if I want to be bullish on this strategy, here's what I can do. If I want to be bearish on this strategy or in the market if you like the stocks that James was talking about tonight, there's a couple of core strategies that I would trade in order to kind of test the waters. I don't have to put all my money in and say I'm buying 1,000 shares of, Merck today because James said so. It's like, no, I'll just trade options, because I can always have risk defined strategies where if it goes against me, fine. I can take calculated risk. If it goes in my favor, I could generate income. If I like it enough and it proves it over and over again, I can follow trends. I can be more bullish. So anyway, I just think there's a lot of stuff I've been working on where, the following is growing, and I'm helping a lot of traders every single day, which that's what I'm here to do. So the services range anywhere between, $50 for a basic, $500 for a full service, $1,000 for the full service with trading rooms. So it's whatever you're comfortable with. But like I said, I'm not here to peddle or sell. It's like people know how to find me, right? Brandon, James, you guys can obviously reach out to me anytime. Anybody that's in the community for Core 4, you can reach out to me anytime. I'm live every day on YouTube. If I'm not, there's a video that's getting posted. So, I read the comments. I've got a Discord channel. I've got Telegram. I'm out there being fully transparent. So, if you're interested in the services, you know how to find me.
So, Chris, what is like, how well is it doing? What's the hit rate typically?
Yeah. So I've been trading the, well, first off, I'll start with the daily program that I do every single day. I'm up to about 91.6% winners. I'm generating, even on a really small contract size, I'm generating somewhere between like 500 to $1,000 a week on average for a small account, like nothing crazy. It's all risk defined. So, the most I'm going to lose is maybe $200. The most I'm going to win. Sometimes I've had winners on the day of 50 to $100. I've had several $100 on the day, but usually every 9 trades out of 10 I'm winning, and I can pad the stats and have a nice little chunk of profit. The ones on Mondays, it takes about 11 to 14 days for the trade to basically be built up, and I stack the positions, and then they roll off. And I've already had 6 for 6 in the service running it live. But going back to 2013, it was a 97% win rate. And that's only trading once a week. If I wanted to trade more than that, which I can show anybody how to do that, it wins 98+% of the time. It's insane. And that's also incorporating what the market has done, which has not been straight up. It's been mostly straight up. We've had one of the greatest bull markets we've ever seen since the bottom in 2009. Okay. But I admit a 15-year bull market has not been a straight line. I just rattled off all these pullbacks and sideways and this crash and this crash. We've had more booms and busts in the last 20 years than we've had in the entire history of the stock market. And it's not going to stop. Like, that's the thing is, if this market crashes, fine. The nice thing is savvy traders should know what to do with it. Silly traders or silly investors are the ones that panic and watch their mutual funds that are highly correlated buying the same stuff, watch it go down 20, 30% with the stock market and wonder what the heck happened. And, if you're at a retirement stage, you're close to it, you should not be taking that much risk. You should accept a boring 4 to 5% gain with essentially no risk. But man, I would rather have a 60-40 portfolio where I'm 60 equities and 40 in gold. Screw bonds. I don't want to have anything to do with bonds. I think the bond market's going to be the thing that breaks the market. I think right now what the Fed is seeing with, they cut rates, they're going to keep cutting rates for maybe another 25 to 50 basis points. I think the Fed ends up breaking the bond market in some way because we're going to have a failed auction, or we're going to see yields continue to rise, and all of a sudden they're going to have to backpedal and start to pause or raise rates, and this is not what the market wants to see. So that's probably my more near-term concern moving in the next 6 to 12 months, is that the bond market is calling the Fed's bluff right now. And, we're probably going to see hotter inflation data over the next, I'd say, 2 to 6 months. And the market might not care right now. But as we go into Q1 and Q2 of 2025, the market's going to care if crap is more expensive, because we keep saying 2.4% year over year, but we're actually 11 to 12% higher than the typical pace of inflation. So that is why stuff feels more expensive. That is why healthcare, transportation, gas, groceries. Look, we went out tonight to dinner, just a classic little Olive Garden soup, salad, and breadsticks, and it's $40 for just this. It's unbelievable how just stuff is expensive. And it's not getting better. It's not.
The 5 is the new 1, bro.
Yeah. I saw an ad from TIAA CREF for all these teachers and all the teachers that have their retirement stashed away. When I worked for a university and taught, I had a TIAA CREF retirement account. And I know that you've got teachers that retire after 25, 30 years of service, and they're sitting on millions of dollars, and they retire, and they're usually pretty happy. But I saw an advertisement from 1996 that said there will be a day that a hamburger and fries will cost $16, or this will cost this. It's exactly what we're experiencing right now.
Yeah.
It's right now. And so it's not going to get better. Nobody's interested in balancing the budget. Nobody's interested in cutting spending, because it doesn't get you elected, unfortunately. And so we have absolute power in the global economy to print, because we're the world reserve currency. And it's going to be and I don't think BRICS is the alternative. I don't think the petrodollar or gold. It's none of that shit matters. It's the U.S. is not going down without a fight. I just think that we're going to ultimately wither away from the inside. We're going to get to a point where we are so weak inside the country that we can't justify having growing GDP. We can't justify having markets at these all-time highs and having the economy be a complete false representation of the stock market. So,
well, the petrodollar, I don't know if you know if this was kind of like it was the most like very under the radar deal, but what was it a few months ago? The agreement that was signed by both the U.S. and the Middle East and OPEC and JMCC at the time for basing the U.S. dollar in the petrodollar, it's over. It ended and nobody renewed it. It's just kind of like just going on now as a gentleman's agreement. So they could change it at any point in time if they wanted to.
Right.
I agree with you on everything you said. I think the next major, and a lot of people look and say, oh, the next major superpower, is it China? Is it Russia? I honestly think it's the Middle East. With everything that's going on over there and how invested they are in the world and what their goals are and how they're accomplishing them. I really do. I think that's the next. Imagine a country where there's no taxes, you still have everything you want. They have air conditioned streets and we got potholes. Okay, let's just for a second roll that in your brain.
Yeah.
So, all right. So let's go back real quick. Two things. Number one, how much has the dollar lost in terms of value? Do you guys know what?
87%.
Since when?
Since eternity, essentially.
Yeah.
Yeah.
If you look at,
we got off the gold standard back in what was the Bretton Woods?
1971.
71. Yeah. So since that point, if you look at the chart, it's just top left to bottom right, and it's just it'd be the closest. Well, you don't have the chart up here. The closest thing would be like, I don't know. Look at I'm trying to think of what stock. Look at a Peloton. It doesn't matter. Look at a stock that started out here. This is what the dollar essentially has looked like.
Yeah.
This is what the dollar, it's like it was up here at some point in time and now it's down here. And this is like the depurchasing power or the loss of purchasing power in the dollar. Now you can take the same comparison and say, if you bought a house with gold from 30, 40, 50 to now, it's the same across the board. Like you look at what it costs. The reason the stock market is up is basically making up for the debasement of the U.S. dollar. The reason that the housing market is so expensive right now and houses are more expensive is because the dollar's been weaker and we have less purchasing power.
Exactly.
So it's not going to change. It's not going to stop. It's like we have unlimited power to print and we have unlimited power to add this liquidity. And this is not saying that it has to change. This is saying that this is what is happening. And at some point, it can't keep happening. And the reality is, everyone globally is drinking the same Kool-Aid. They're all in debt. They're all in irresponsible amounts of debt. The amount of trillions of dollars in leverage liabilities that this global economy has, these things will never be paid for, ever. It's mathematically impossible. So
we're still in debt from the Revolutionary War, to France. People don't get that.
James, did you see that it took like 212 years to create like $6 to $10 trillion in debt, and we did it in the last 4 years? Yeah. It took 212 years to create, let's say 10 trillion in debt, and we just created it from 2020 to now. That's the recklessness that we're seeing right now in the U.S. government with spending. And it's not just the U.S., but it's Europe, and it's even China, and it's all these countries. And so at some point, it's going to have to be like a global reset, and nobody knows what that looks like. And I truly don't think it's going to be breaking the financial system. I just think there's going to be some type of reset where it all starts over. And I don't know who comes ahead. I don't know who comes out as a winner and loser. I don't know. And I wish I did, but I don't. And so I do think that there's so much money to be made in these financial markets that there will be like a culling and there will be some type of awful event, or maybe it's just periodically over time. But I would imagine with the way these cycles are running, they're going to happen faster and be more violent and be uglier. And you're going to be either screwed, or you're going to be stuck with somehow some purchasing power that doesn't wipe you out, and hopefully you can build from the ashes. So I don't know. I know that, and maybe that's super depressing to hear, but this is the crap that this is the crap that you have to kind of think about as a long-term investor. I hope the markets don't crash, right? Period. I hope the markets don't fail everybody that's been invested. And we've had a great run since 1920 something, but we can't do it anymore because the whole market's on, I watched Mad Max Furiosa on the plane and went to California this weekend. It's like, if we're going to like a straight up bartering system, and it's like, well, I mean, I don't know how many people want to live in that world.
What was that movie Waterworld where they were trading in sand? No.
Yeah.
Well, I'll also say this, and like this is a sure maybe a plug, whatever, but it's truly a belief as well. Is that's also where like the companies that I work with insurance and stuff, they've been around since 1925. Like they survived the Great Depression because of how they do what they do. Now, granted, it's the max return you're going to get, which this year was one of those max years, 19% return for a couple of my clients, right? 19%. On the low years, yeah, it's 0%, but it'll never be lower than zero. So your money's insured against all loss. So even in the market crash, these people who had their money invested this way, they didn't lose it, right? You could take a loan, and all loans are callable, but it's not a loan against your own value. So they would just, the loan is callable. So keep that under, in consideration. But you could take a loan against the value of your policy and, of your net accumulated value, and then take it out and go invest in the market yourself and grow. I literally have people doing that, and so it's great to see, and it's just a way to kind of protect yourself if you believe that is going to take place. I'm not telling you what to believe.
Sure,
that's one thing I am not going to do. But I agree with Chris wholeheartily that there's going to be a reset. What that looks like, who knows? Where it comes out, is it a world war? Is it this? Is it that? Who knows?
Yep.
I mean, President Xi said the only way to take down America is to have a war on three fronts. And, well, there's the Middle East, there's Russia, and if they repatriate Taiwan, maybe that's that. I don't know. I know BlackRock will come out unscathed, and they will rebuild the world. That's
BlackRock, Vanguard, like they'll find a way. Yep. And I was going to say this too, as an alternative. I'm sure a lot of people in this community too. It's like you've had crypto exposure in some capacity, right? I still like my best friend is so maximalistic in Bitcoin that it's like anytime he gets upset about like, he's like, the New York Stock Exchange is going to start trading at 1:30 in the morning and go all day. It's like, sure, but that's the evolution of just order flow. I mean, right now we have single day options for the indexes that'll eventually become single day options for the Mag 7 and eventually become single day options for the most liquid stocks in the world. That eventually be a market that trades for 24 hours or 23 hours like futures, or 24 hours like Forex, or 24/7 like Bitcoin or crypto. I mean, this is the evolution of the market. But I don't think that when you take something like Bitcoin and create SEC approved ETFs that are now securitized, you can't say that Bitcoin is the alternative anymore, because it's in the same game as BlackRock that's sitting on, trillions and trillions of dollars of managed money. It's a securitized asset now. So it's not a decentralized. It's like you're taking hard-earned retirement money and you're putting it in the same assets like the stock market. So, I mean, again, Bitcoin is not immune to some type of reset. It's not going to automatically emerge as the greatest thing ever created. It's like nobody knows, because right now Bitcoin is going up because we've seen added global liquidity, we've seen added money supply, we've seen risk appetite, animal spirits, all these things that drive risk appetite already. That's helping Bitcoin. It's been taken more seriously because it's now SEC approved, and there's going to be options possibly after the OCC and the CFTC approve it. But it doesn't make it the one standing thing that can never, ever, ever lose. You have people that believe in it and people that won't sell it. But then you have like me. I mean, I'm a trader, man. Like if I've got 3 to 5% exposure to Bitcoin and it goes up 2x, 3x, 4x, 5x, I'm taking profit and I'm moving into something else, and I'm reallocating to keep it at a 3, 4, 5% allocation, because I believe it has to be calculated risk just like everything else. There is no one end all be all solution. I'm sorry. That's not investing. So I do hope this, and I want to just kind of spin this back to some type of sliver of optimism here, but I do think that Bitcoin could also be this potential, like it could be this great equalizer for people that have started late in the game with investing, right? I mean, I want to say like maybe 35 to 40% of households in the US are actually invested in the stock market. But that representation of that, the average household that is invested for very little. I mean, you've got your Robin Hoods at fractional shares, you got zero commission trading, you got Acorns where you can stash some money and just put it in the stock market. If you have something to save, yes, it's smart and it's wise to be invested. But most people are behind, and most people are struggling just to save any money at all. So I'm hoping for just Bitcoin, if it gains and it is like a great performing asset, that it does so enough that it can help people catch up, where they can take a $5,000 or $10,000 position and actually watch it grow to $50,000 or $100,000 and do it at a fraction of the time that it would be if it was just the average 8% hold in the S&P. Like that's what I'm hoping it represents, which is gets people caught up, gives everyone a chance to then hopefully learn how to invest a little bit more well-rounded, a little bit more diversified, and then survive for the long run, as opposed to nobody knows. Nobody knows if the dollar is going to crash. Nobody knows if Bitcoin is going to be the greatest thing ever. Nobody knows if gold. Who knows, man? And I'm never going to be the trader investor that says this is what's going to happen. You can't say that. So what I do is I diversify and I take income trades and I win and I lose and I find a way to survive. And all of a sudden I look at my account. It's like it grows, but my wins are about the same emotional tie as my losses. I just keep trading, and so that's how I do it. And maybe that's different than most, but I'm never going to be a YOLO trader. I'm never going to make a fortune on one stock or one trade, unless I eliminate a risk and just let it run. But my job is mostly I live in the world of ones and twos. I get a lot of ones and twos where I win, and if I lose, it's like I just win more than I lose. Pretty simple. I win bigger than I lose. I win more than I lose. It's just simple math. But I'm not the trader that's going to make absolute fortune on getting lucky. I don't think this is about luck. So anyway.
Well, at the end of the day, this is a journey, and it's a journey for all of our community to learn, understand, trust, and see us here each and every week, making a difference in our lives and then also making a difference in theirs. So I want to go ahead and sign us off, guys. We've been on here and giving the people a lot of information to think about for the week, and let's see how next week looks. So I will see you guys later.
All right. Have a good one.
Thanks. Right. Okay. Nice to have you back, James.
Yeah, man. Have a good one. See you.
All right. Thanks, guys.
Next week, James.
Yeah, definitely.